Do you worry about these rising delinquencies and the health of the consumer in the U.S.?
Worry, yes, I worry, but I don't think there's anything really wrong with the consumer. And I think it's just what they said in that cut. Jobs, jobs, jobs. They have a job, they think they'll keep it, and they think if they lost it, they could get another one and a raise on the way in the door. And as long as they believe that, they'll keep spending unless they get way too indebted. And their ability to pay back is no different than 2019. The consumer looks fine. There are pieces inside the consumer where you have to worry. The lower end's getting pressured. We're seeing trade down. All the things that say it's a little weaker, but it's not much weaker. 2023 was a good year. 2024 is a good year. The first two normal years since 2019. The consumer right now looks fine.
Except what we heard from earnings season so far is pressure on the low-end consumer, cumulative impact of inflation, higher interest rates. There were weather concerns. There was even a COVID concern in a few earnings reports. So is there a mismatch between the data and what you're hearing and seeing from companies?
No, I don't think so. I think there's winners and losers. Like if you're Walmart,
look at restaurants.
Costco,
look at restaurant comps.
Right.
I know Starbucks was the worst in show, but they all showed lower comps.
They're on the wrong side. Inflation in experiences is still running 4.5%, 5%. Goods are zero or negative. So if I'm a consumer, I look at it and go, you're a restaurant, you're stabbing me here. Oh, gosh, the sweater's the same price it was last year. Maybe I'll just buy that. We're seeing the consumer say to the restaurants, I will not pay your prices. In the other side of the business, goods are not inflating. So the consumer is saying, hey, this is the same price as last year. This is great. It's really grocery inflation is still a little high, but it's very low compared to where it was. But stuff like my discretionary goods, the consumer's looking at that going, this is a bargain now.
When you get UMISH on Fridays, do you discount it? Are those sentiment survey models broken because of politics or something else?
Yeah, the consumer's really not happy, but it's not with the retailers. It's with the rest of their life. And you always get those kind of reads when the consumer's not happy. I wouldn't want to be a politician because the consumer's not happy. But the consumer has said, damn the torpedoes, full speed ahead. My life is getting better. I'm not tied down anymore. I can go any place I want to and I can buy anything I want. And I have the wherewithal to do it because my borrowing capacity is still there. And I actually have a little bit of savings left out of all that stuff that came during the period of we gave everybody money. That's burning out, but it's not gone. And we're as healthy as we were in 2019 as far as being able to pay back. So they're going to keep spending unless somebody says your job's going away. And they haven't said that.
Even with rates where they are, again, I mean, just to reiterate that, because they have been higher, certainly, than they've been for quite some time, for quite a period of time now.
Interest rates on credit cards are the highest they've been in a very, very long time, right? They're like running 21%. They were 14.25 when we came into the pandemic. So that is a problem. And if the Fed stays with it long enough, they'll finally crack the consumer. But they haven't stayed with it so long yet. I've been saying for months now, we need to lower interest rates. We don't need to go back to zero. We need to take about 150 basis points off the table. That'd be 6 cuts. I'll be glad when they start. When they start, 2 things will happen. The consumer will feel a lot better, and they'll start to get some easing there. And we'll get some relief on all the other parts of the economy that this is putting pressure on. We'll see deals start happening again, and we'll see people start to refinance some of that real estate that's going to crack the economy if we don't start getting easier rates.
So how do you navigate retail or consumer stocks right now? Because pretty big divergence if you're in the restaurants, say, or a Tesla, or one of the weaker areas. It's been not great performance this year, but there are some big winners as well. So does it depend on the category, the income? How do you navigate it?
Well, my favorites are Walmart, Home Depot, Costco, Dick's Sporting Goods. They're huge. They're well capitalized. They can borrow money if they need to. It's not a big issue for them. The consumer's with them right now, and they're winning the game on market share. If you're not well capitalized and you're getting hurt by interest rates and you can't reinvest in your business, you're going to start losing market share. We've seen, the dollar stores go through and close all of those stores. Why? Because Walmart's putting downward pressure. We've seen Target struggle. Why? Because Walmart's also putting on upward pressure. They're bringing in a more affluent customer. So the big players, it's a good time to be a big, well-capitalized, strong player in retailing because you can reinvest in AI and you can reinvest in tech, and the littler guys won't be able to.
Or luxury. Best performing retail stock this year, Ralph Lauren, up 70%.
That was on my list that I gave you. Ralph Lauren, I'm all about. Tapestry, I'd love to see him get this deal done because I'm all
also
about
up double
them.
digits this year.
I'm a big fan of branded, strong brands. Brands are winning. And that's right across the board in that aspirational and upper end.